The company faced a challenging quarter in the first quarter, results below expectations, a large part of it impacted by the unseasonal rains and a weakish summer for some of their important summer products. We have Mr. Anil Rai Gupta, who joins in now to detail the numbers going forward. Mr. Gupta, the first quarter understandably weakened by the unseasonal rains that took place, and that's impacted your fans business in particular, your coolers business as well. And at the same time, we've seen Lloyd's as well underperform this time around. So the question then is, how much can you improve upon what has happened? What proportion of these sales are lost forever? And in light of that, what is your revised outlook for this year stands at? Because at the start of the year, you did not anticipate this coming.
Sure. I think, obviously with a very strong summer quarter last year, the entire industry, including Havells, was anticipating a very strong summer this year as well. And the industry was prepared. The inventories were lined up. The channel was prepared. Starting from south and then to the entire country, we experienced intermittent rains, and that loosens up, slows down the tertiary demand completely during the quarter. And you asked about recovering lost sales. Usually it doesn't happen because the summer season starts slowing down anyway after the June quarter. So we will, now start getting prepared for the third and the fourth quarter, where there is, again, pickup of summer products start happening. Of course, fans is more of a structural demand, so should start from the second quarter itself. But coolers and air conditioners, we expect third and fourth quarters starting to normalize now.
So how does this change your outlook for the year versus what it was when you started?
I think overall, we are still quite strongly motivated towards the second half of the year. I would say that the consumer demand has been slow, at least in the first quarter. But we are enthused by the fact that the volume growth in lighting has been good. The volume growth in cables and wires business has been good. With a stronger, monsoon, I do believe that the second half should be better for the consumer products as well. So hopefully we should be recovering quite well.
Okay, all right. Hi, Mr. Gupta. Good to see you again. Thanks a lot for joining in. So for the year, if you had to put a number to it in terms of revenue growth, what could it be? A rough, broad range.
Well, you know very well we don't give guidance, but I think overall, if you say we don't see any market share losses, at least in any of our product categories.
Yeah.
So that's why it gives us confidence. The coming quarters should bounce back very well.
And how was the first quarter when it came to market share? Yes, there was understandable weakness, but did you decline less than your competitors and the unorganized?
Actually, I think the best way to look at it would be to see the first half of the calendar year from Jan to June. We believe that because, many companies have different strategies of how they work with the channel. But I do believe that we are still amongst the top 3 players in air conditioners in the first half.
Okay, let's focus on your cables and wires segment business. It reported actually robust growth, which is great. Wires growing slightly faster than cables. What's the mix here? And what is the volume growth trend you're looking at in the coming quarters? Also, just, since we're talking about growth, what about input costs? How do you see RM prices fluctuating?
So I think the volume growth has also been steady. We have seen over 20% volume growth in wires and cables business. Wires contributes almost 60% to our overall business. But I do believe that, wires was also benefited by a little bit of volatility in raw material prices. There was channel, I would say channel, it has stopped some inventory at the end of the quarter. So there will be some normalization in the second quarter. But we do believe that, with our capacity build up in underground cables, power cables, that I think will continue to remain strong in the coming quarters as well as years. So we are looking at a strong growth in cables and wires during the rest of the year as well as in the coming few years.
What's your prognosis for Lloyd's? The first quarter obviously impacted by summer, down 35% in sales, and you are still investing behind it. Does that push your margin expansion plans and market share expansion plans in Lloyd's?
No, absolutely. I think we are very positively inclined towards the performance in Lloyd. In fact, if you compare Lloyd's 2 years performance, so the quarter before last year, the revenue is almost the same, where the margins have almost doubled. So, and our investments in brand and people or feet on the street continues to remain high. So that's giving us confidence that we are on the right track, and we'll continue with the investments in Lloyd.
And break-even and margin expansion by when? Break-even has happened, obviously, but margin expansion
break-even has already happened. We have obviously, first quarter was an aberration, but I think we are in for a good few quarters now.
Okay, all right. If you could give us a sense on the lighting part of the business, that reported a bit of a degrowth. What is the trajectory out there, and how do you see profitability improve?
I think lighting also, we did see a value degrowth, but there is volume growth, and we see that the price erosion is now plateauing, so we should be expecting good growth. But in the meantime, we are also developing capabilities towards becoming one of the leaders in the lighting industry, which we are quite hopeful of. And I think if we really see, while the profit margins may be looking lower, but our contribution margins continue to remain strong. They are in fact industry leading. And one of the reasons is also that Havells Lighting is focusing a lot on innovation rather than just being run-of-the-mill products. So we'll continue to invest behind lighting in terms of innovation as product development, and hopefully turn out to be one of the top 2 or 3 leaders in this segment.
Top 2 or 3 leaders in this segment. What about solar? Because you are considering that as to be your major growth driver as well. What proportion, what size has it reached right now, all the solar related products, and at what pace versus your overall company do you expect this business to grow?
So there is focus on renewables overall. When we had made this investment in Goldi, we mentioned that we are looking to secure our supply chain to have a very fast growth in our solar business as an overall renewable space. And, this happened at the end of the quarter. I think we are expecting very fast growth in the coming quarters in solar business. What's
the aspiration here? How big do you want to be?
Well, it could be much higher. Last year, we did about 400 crores. We're looking at over 1,000 crores in the next financial year.
All right. That would be something that, the street would like. So despite, understandable seasonal weakness, your commentary of having held your market share and things improving, especially in the second half of this year, when the second round of purchase for summer products comes in, notwithstanding the lost sales this summer, street likes that. And we've seen a bit of a spike on the stock from the lows as well. Solar, that was 400 crores last year. This year is likely to be about 1,000 crores as well. So that's the management of Havells detailing their first quarter earnings, more importantly, giving you the outlook for this year as well. Take a short break. On the other side, we have another management for you. Raj Ratan Global joins in. Stay with us.